in here for all of you to see. Got one trend right there. Um, it's really annoying to do all this on. Oh, what did I do? We're okay. Okay. It's the other trend. Well, you get the idea. And you get one more trend over here. I'm sorry if my trend lines aren't perfect. I'm trying. I'm not gonna fix them. I just hope you guys understand them. And you got gap play. Look at that. That's support, right? Never even closed its gap. And you got one right here. If it fills its gap, and you know if it closes its gap, it's going down. Okay, for this one, we fill this gap, so only one. Oh, what did I do? Okay, and we got two over here. This is annoying. All right, there we go. Sorry about that. I was getting upset. Um, all right, so we set up all our trend lines. Let me just go back into crosshairs. So now we know how many bottoms all these stocks have. Okay, we have in that for the SOCL we created. We show three bottoms. We see have this uptrend, the gap play, and the support level after the gap that opened up higher. Same thing, we have two trend lines over here confirming support at this level, and we have three trend lines over here. Now, this is the rule of thumb for when you see too many support levels. This trend line is the strongest trend line of them all, okay? So if this trend line breaks at any given time, you see this uptrend right here, you will know regardless if it was this gap play and it hasn't been filled, you'll know it's going back down. The reason why, because it's broken, it has broken its long-term trend rather than a support level that been created a few days ago or a week or a month ago. You have this trend for multiple months, and a new support level is a more short-term move, security protection, I guess, on the downside risk than a long-term trend. So if that long-term trend is broken, chances are it's going to reverse its trend, okay? So this uptrend, so the very first support level you see for these lines is right here on SOCL, and then you have a second one and a third one. But however, this is where we're talking about being a trader and making your money, okay? Not being an investor, being a trader. Okay, an investor would probably have their stop order below this trend line or maybe right below here, protecting itself from this gap play and this downtrend. So he knows if it breaks, he's out. It takes a small loss, I would say about a point, maybe 3/4 of a point. Um, but as traders, we're looking how to trade this. So as an investor, that's investment strategy. That's a perfect trade for an investor, especially someone that's looking for 3 months out. As a trader, we're looking for something, obviously, hopefully no more than 2 weeks. So let's go back. Let's just go narrow it down from 120 days to, let's say, 20 days. Okay, and let's zoom in maybe 14 days. All right, so we see support level here. What I want to do is, I believe on the 10 minute, let me just go on the 10 minute. Ooh. Okay, on the 10 minute, I like to see this support right here. I'm willing to take this support. This support right here is not too bad. So let's say, was it 12 cents risk? Okay, so I'll take about 12 cents risk. Let's say a low of 20.39, whichever is the low one. 20.39, so my stop will be at 20.38, 11 cents risk, okay, per share. On Facebook, let's zoom in a little bit more. Let's go on the 14-day. I'll put my stop order below this long tail. So below this long tail will be 74.72, so a penny below 74.73. So the stop order will be at 74.72. That's about 50 cents, maybe 55 cents per share as risk. Your risk reward per share, you're risking 55 cents. And now we're going to Twitter. Oh, Twitter's just popping up right now. Let's go to a 14-day. Obviously, it's going to be below this long bar, which is 70. Oh, I'm sorry. Where am I getting 70s? It's 46.04, so the stop order would be a penny below that, 46.03. Right now, it's 47. And I'm sorry, I'm removing the recording. Let's just move this over, 47.17. So, well, right there. So we're up about a point. Well, we're not up about a point, but Twitter moved up about a point today. As you can see, the social media stocks are very stable. They have nothing but an upward trend. So this is great for really a long-term investor. But as for a trader, if I see I'm able to make maybe a point and a half, 2 points on any of these trades, I'm going to take advantage and try to get into position. Um, my belief is Twitter will move a lot more faster than Facebook just because Facebook already, oh, look at this bull flag on the weekly chart for Twitter. Let me just back it up real quick. Let me just show you the two between the weekly chart between Facebook and Twitter. Let me just go to the year, okay? And, well, this really doesn't make a difference, but we'll do this. Uh, the reason why, I'm sorry, I had this on the daily. The reason why SOCL doesn't make a difference compared to Twitter and Facebook because I'm going to show you which one will move more on percentage gains between Facebook and Twitter. Now, the SOCL is combined of all social media stocks. So, it's going to move based on that, but based on the particular company in it by itself, what they do as their business model, one can move more rapidly than another based on their earnings and their growth, where the SOCL will move in favor of all of them based on which way they go, but it's not going to move as much in percentage gains. Okay? So, so with Facebook, we have a bull flag right here. With Twitter, we have a bull flag right here. And we have somewhat of a W wedge, and then once this leg goes up, this could be a reversal. This is a huge upward trend. Which one will provide more? I honestly think Facebook is obviously more secured with their business, but with Twitter, we haven't seen that up move yet like Facebook. I believe for every, I don't know, point, Facebook will go up, Twitter will go up 2 points. Um, it's not, I'm not going to say it's catching up to Facebook. The reason why I say this is because Twitter formed some type of new advertisement deal that shows that it may be successful in the near future. And when Facebook was going through the same thing, remember it crashed, went to $18 or something like that, and it's at almost $76 a share today. Okay, where Twitter had something similar go happen because they really had no monetization type of service coming to them, but they were talking about a new advertisement where it could make Twitter somewhat profitable. And this over here was somewhat of a downtrend. If you look at my previous Twitter postings, Trader Circle Twitter postings, you'll notice that I provided something like this, a chart something like this, and whichever would have broke out would have went that way. Obviously, it broke out through here. You see the downtrend is broken. This pretty much never had a downtrend, Facebook. But you see, with Twitter, downtrend is broken. There's a bull flag. It's gonna go a lot higher. I believe for every dollar, maybe $1.50. Let's actually take a look today. Look, Facebook up 25 cents, Twitter up $1.06. So 4 times the amount as far as percentage gains. It's up 2%, Twitter's up 2.5%, almost 2.33%, and Facebook is up, just about 1/3% for the day. So the move, the favor, if you invest between the two, um, or trade between the two, Twitter has a lot more upside potential than Facebook. Twitter's a lot cheaper per share than Facebook. When I mean a lot, I'm talking about half its price. And, both of them will move up due to this index. If You know, it's just showing an upward move. So they're both going to move up regardless. We're just talking about percentage gains, which one will move up further and faster per percentage gains than the other. Okay, so we're going to pause it here. As a trader, I already stated my stop orders based on the daily bars. Remember, it's the bottom of either today or yesterday, depending how far it was one bottom to the others. Um, Let me just verify real quick for all of yous. Just go back into the 14-day and we'll pause it right here. So I hope you understood why other certain people like to trade other stocks than other people within that index. It's because of the percentage gains. Okay? Even though if you look closely, over here, uh, what I have the crosshairs again? Trend lines. Okay. Over here, there's 13 million shares traded on Twitter. Okay. Now for Facebook, there's 13 million shares, just about the same. 34,000 shares for this index. This index is a lot more volatile. So if there's good news on any of these, this will explode a lot easier. But volume plays, volume makes movement, volume is more secure for a trader and an investor. When you have, God forbid, let's say, well, not God forbid, God bless you, if you can't afford 100,000 shares of SOCL, but only 34,000 shares which traded for the day, how are you supposed to get out of position? I mean, are you just going to hit the market and get out maybe, I don't know, 10%, 5% less than the current market value? I mean, sometimes you would have to go through those measures, right? But when you're trading something like Facebook or Twitter that has consistently high volume, I'm not saying they have spectacular volume like, I don't know, Sirius Satellite Radio or some other companies that trades in the hundreds to 300 millions of average shares per day. But, they trade roughly 10, anywhere from 10 to 50 million shares a day. So if you own a million shares, which is $75 million for Facebook, chances are you're not going to have a lot of trouble getting out as somebody would have a million shares of SOCL. I'm going to pause it here. TraderCircle.com members, it looks like Facebook and Twitter formed a new high today. Same go for SOCL, excuse me. Looks like a huge reversal over here, nice reversal head and shoulders. Looks like a shoulder, head, shoulder right here. It's a nice bottom, looking good. Same thing over here, as you can see, and over here. It's looking good on the daily chart, on the 10-minute chart.